Good morning from the Hong Kong, Canada Business Association, Toronto GTA section. My name is Zohair Hassanbai, the Executive Director and your Master of Ceremonies this morning. With me is Victor Ng, our Board Director and our Technical Advisor. 大家好，歡迎各位. Hello and welcome to the webinar titled The Residential Real Estate Market, Time to Invest or Divest. First, I want to thank our sponsors, HKCBA, HSBC Bank Canada and Tridel. Your support is appreciated, always. A little bit about the Hong Kong Canada Business Association in Toronto. For 37 years, we have been expanding strategic relationships between Canada and Asia, using Hong Kong as the platform. We have superb networking events to develop high-level business relationships throughout the year. We are honored to have several distinguished speakers as the moderator and panelists. I would now like to introduce Eliane Chung, who will be our moderator this morning. Eliane is currently an active board member and at work in HSBC Canada. She is a branch manager of wealth and personal banking. Eliane brings 30 years of retail banking experience to her role. She holds the designation of Personal Financial Planner of the Canadian Securities Institute and has extensive knowledge in banks, wealth, and lending services. During the years, she has successfully led her team to assist numerous customers of her branch to achieve their financial goals, and along the way, achieved many distinctive awards in her banking career. Over to you, Eliane.
Thank you, Zohair, for your kind introduction. It's my pleasure to introduce Winson Chen from Tridel, who will then make his presentations. Winson was the National President of Real Estate Institute of Canada in 2018 and 2009. A real estate professional with over 25 years of experience, Winson currently leads Tridel's award-winning sales team as Vice President, Sales Development. A strong believer in supporting the professional growth and in development of future leaders in the real estate industry. Winson has been heavily involved in advancing the standards and practices of the real estate industry in a variety of leadership positions. In addition to numerous awards from his peers, Winson specialized in condominium sales and management, decisive leadership, and public speaking. Winson, thanks for spending some of our time and expertise with us. Over to you, Winson.
Thank you so much. Thank you for the kind introduction. So maybe I would share my screen now.
Thank you.
Did you allow me to share?
So yes, I have shared it with everyone. Is that better?
Okay, yeah, it's okay now.
Right.
Thank you, Zohair.
Okay.
Okay, so can you all see my screen now?
Yes.
Very good.
Okay, thank you. So a little bit about Tridel. We are Canada, one of the largest leading developer in Canada. We basically take from the development, building industry, all the way to property management. So this is something that we're quite proud of, and we collectively with HSBC collectively built the city. For the past 85 years, we built 85,000 homes. So it's a privilege for me. Thank you, HKCBA, for allowing me for the opportunity to share our view about the market. Now, I take you back to the memory lane since last year, and we were kind of unsure about the market, and especially in our condo market as well too. Now, Toronto, for those of you may not know, it's actually one of the most active real estate market in North America. Normally, before the COVID, we would have 31 project launch, and then we are dealing with almost 100,000 suites and construction. Our company alone in charge of roughly 9,000 of them. Last year from the COVID too, as you can see in the Q2 figure, we actually dropped only 6 projects. Interestingly, this figure is quite impressive, because if you take a look at last year too, we honestly don't know what we were doing, and then we were still collectively wanted to deal with the COVID. But fast forward to this year, you already see that we have over 30 project launching, and as a matter of fact, towards the end of last quarter, it's already there. Now, some of the audience would always wanted to think, or some of the mutual customer from HSBC or Tridel would hoping the price is actually going lower under the COVID, but our market seems to be quite resilient, and we have a pretty good market happening in the new home industry. And in the resale market, this is just the up-to-date figure from Toronto Real Estate Board, and we already recover back to normal. It's almost 100% change from last year to now, and the average price has performed quite well as well too. So our average home price hold up quite well. Now, what happened last year? Obviously, what we love to do best, we cannot do, and even back then, the bank or sales centers closed, and we could have to collectively deal with this challenge. But our market has actually been quite resilient. The market that you see the downturn last year, it's actually more due to the economic restriction rather than any negative financial impact to us. Have we been there before? Our market is quite resilient. The Toronto real estate market actually go through SARS, the nuclear disaster at Japan, or even the MARS outbreak too. Now, of course, I don't have the crystal ball, but what I can tell you is our market has been quite resilient. Our company alone, for 9/11, immediate after 9/11, we're confident about the market. The market is quite resilient. We launched Ovation at City Center. SARS outbreak, we launched a Circa at the City Center, which is Highway 7 and Warden, which is also one of the landmark in the area. And even the financial crisis, while a lot of other North American city was suffering from real estate, our real estate is not quite negatively impacted. We actually launched a Hallmark Center. Of those of you who is in Toronto, Yonge and Sheppard, it is one of our landmark and masterpiece community, which is actually quite successful. Even towards the end of the credit crisis, back in 2011 and 2012, we launched 10 York, which is one of the iconic building at waterfront. If you take a look at Victor's background, you actually see our condo there as well too. So that's proof to you that our market has been actually quite resilient. Our Canadian economy, yes, we all suffer together with all the counterpart around the world. We have minus 5.4 GDP, but this year we already started to recover. Now, I'm not saying that we are totally recover, but unfortunately, we still collectively deal with the negative impact for the COVID. But interestingly, when we take a look at the equity market, our equity market is not dropped as much. So that means that people are quite confident about the future in various parts of the industry. Now, COVID definitely negative impact, unproportionately impact a certain part of the industry. Like, for instance, for folks who participate in retail, travel, they all suffer. But some of our collective or mutual customers, to say, we still have individuals that still be able to continue work from home. Since the COVID accelerated the technology and accelerate a certain side of the industry, so we still have good number of people that be able to go into the home ownership. Now, immediately before the COVID, we are one of the best market in North America. Collectively, we did $22.6 billion of business and 36,000 new homes. So, which is a very good number in all this among all the city across North America. Now, this is an interesting article I picked from Financial Post. Now, Canada has 3 million richest family, of which $8.7 trillion of access is tied into real estate. So that shows you the love of the real estate for us as an organization, and the love of the real estate to as Canadian. Now, so let's take a few minutes talking about the most important thing. Obviously, we were talking about how we're going to see the market. Now, unfortunately, Tridel do not have a crystal ball. I do not have a crystal ball as well. But what we can point it out to you, this is the slides that I borrowed from Altus Group, which is one of the leading data analyst group, and which I agree with the point. We needed to focus on the policy, interest rate, geopolitical event. Do we have employment opportunity, immigration opportunity, and education opportunity? And most importantly, obviously, is the COVID too. So for immigration, definitely we deal with a lot of immigration, but unfortunately, Toronto have limited land for us to develop. And for the past few years, you already know that we need to continue to intensify. We're almost like an island. On the north side, we're surrounded by the Greenbelt, and the south side, we're surrounded by the Lake Ontario. So it's almost like a Hong Kong or Tokyo type situation. So we don't really have enough land for the population growth that is anticipating. Canadian government have already targeted over 400 immigrants per year. So this number, yes, COVID is tempered a little bit, but we do not see it slowing down. We continue to be ranked #1 in the world according to the 2021 Best Country Report. Population growth as well too. We are higher than a lot of major cities, which is Arizona or Texas. Interesting, population growth is #1 among a lot of major metropolitan city. And then we are also ranked in one of the global city around the world. Interestingly, Toronto, if you think about us, 50% of us are not originally from Canada. Collectively, we be able to speak 140 different languages. So if you have this type of global advantage, and take this compared to a lot of cities in North America, we are all the way up there. So as the immigrants coming into here, I wanted to show you some simple math. So if assuming we have 100,000 people coming here too, meaning that we need at least 55,000 new residential homes. But unfortunately, in terms of the supply constraint, I'd be able to build 38,000 units. But I highlight the word planted. I planted to build doesn't mean that I'd be able to build 38,000. So we continue to deal with the supply issue, have a shortage as well too. Now, in terms of opportunity, I do believe that we have great employment opportunity, not because Toronto is the Canadian leader in terms of the corporate jobs and finance or real estate and all that too. What we need to pay attention is actually technology industry, and we are among one of the top city across North America. A lot of people think about Bay Area, Washington, Seattle. Interestingly, Toronto is #4. A lot of people actually wanted to move abroad and work to Canada, according to a survey done by Roy LePage recently. And our own homegrown tech shop provide a lot of incredible jobs too, such as Shopify. And then you already hear a lot of major headquarters have set up shops in here in Canada, like Google, Facebook, and Amazon recently as well too. Now, not only technology, we are also Hollywood North too. Do you know that under the pandemic, we are still dealing with the $2 billion film and TV production industry? I'm sure that under the COVID too, we all stuck at home watching Netflix. Queen's Gambit, background, Toronto. If you take if you want to like to see the Apple TV, the Seas 1 and 2, production is here in Toronto. Kevin Hart right now is shooting a Hollywood film here too, and then even the Netflix, the Amazon Prime Video, the dark comedy, Boys 1, 2, and 3. The background, you actually see that headquarter for that superhero It's actually a Royal Thomson Hall. So we are dealing with a lot of job opportunity coming here too. Now, job opportunity is nothing without education opportunity. Ontario have 42 different education opportunity. Now, I'm one of the recipient as well too, 30 plus years ago. This is why I've come to Canada. Yes, University of Toronto or some of our university is still not Ivy League, it's not Harvard, it's not Cambridge yet too, but we do bring in an incredible quality education here too. Yeah, we have over 500,000 people coming to study here as a foreign student. Not just education program, it's also top-notch. Canadian government is also have a robust work permit program for international students. Education.com ranked Canada to be #1 as well too. Now, currently, because of the geopolitical event happening in Hong Kong, there's over 400,000 Hong Kong Canadian may accelerate the plan to come back, or maybe send the son and daughter here as to here in Canada. Now, mortgage, one of the points that we need to talk about, now I'll defer this to Eliane and Florey's team to talk about for the mortgage side. But this graph I really want to bring to your attention. A lot of people say, how come our market is so robust and then we don't really experience a bubble burst or a crash of the real estate market? If the blue graph is signify the mortgage default rate in the United States. You take you back to 2008 and 2009, the default rate is over 11.54%. And fast forward to now, they're recovering quite a bit, is 2.69. Take a look at Canada default mortgage rate. We are not even over 0.45% is the worst case scenario. Because of this conservative and robust policy with the Canadian banking industry, this is actually keep us afloat. We have a very conservative lending policy. Yes, it's more difficult to get our mortgage, but because of the very disciplined policy, as such as HSBC, this is actually keep us a very strong financial center here in Toronto. During the COVID, we also save a lot too. Because of the super saving, we have a lot of millennial and bank of mom and dad actually getting into the market to help out the new homeowner to get into the market. While a lot of people think that the Toronto market is not it's going down during the COVID too. As a matter of fact, it's reversed. Our market is actually quite resilient, and in all aspects of real estate, and even commercial leases too. While a lot of people say there's no more working downtown too, you already see some major commercial lease started to pop up as well too. Now, in terms of Toronto, how big is the Toronto market? What is the big potential? If I ask you the question, where in North America you think have the most construction cranes? You may say it's San Francisco. You may say it's Los Angeles, which is 41. And you may say it's New York City. The answer is all wrong. I show you the answer already. Toronto, as we speak, we have 208 construction cranes, which bring us the most active city with construction across North America. We are almost just like 25 years ago, New York, 25 years ago, San Francisco. We are going to be a major metropolitan city. Now, demand so far, hopefully you understand the demand. We do have very strong demand. How about the supply side? But we do believe that the construction cost is not going to decrease. The land cost, weather is a big constraint because extreme cold alert, extreme heat alert, we cannot build. Labor, all this are big challenges. Land cost is not going down. Labor, of which 69% of us would think that we may need to have problem finding labor. Typical cost of a condo. A lot of people think that, okay, developer make a lot of money. Not quite. Because of, as I mentioned, about the lending policy, a strict lending policy from the bank, which is not an easy, as a matter of fact, it's a complicated job as the condominium industry. Land cost is not going down, construction cost is not going down, government charges, of course, is going down. We're not going down. We are operating between 8 to 14%. So it's really difficult for the price to go a different direction, as most of our price are cost-based. So long story short, I think, there is a many factor pointing us of a very strong demand and strong factor pointing to a strong economy. Canadian government will be leading in spending. Canada must play a part in the U.S. recovery. And according to one of the top economists, Benjamin Tao, they also believe that office sector will be operating quite well. So, the conclusion is now our market has been quite resilient. Strong demand dynamics and supply, we still need to catch up the supply. So, in our view, I think our condo market is here to stay.
Thank you, Winson, for your valuable information. Insider view of the residential property market here. Thank you so much. And I do some questions coming in, but we will discuss further after the next segments. I would like to pass the call and to my colleague, Mr. Florey Ho at HSBC Bank Canada. Florey has over 19 years of experience in the Canadian banking industry, 11 years with HSBC Bank Canada. As a trusted financial advisor, HSBC Premier Relationship Manager, Private Client Relationship Manager, and 5+ years as branch manager, Florey gained insights on understanding different client holistic financial situation and customize different solutions to address their banking needs. Florey's work in Hong Kong and his Chinese background enabled him to develop and continue enhancing his client new to Canada banking journey. In property purchasing financing, daily banking solutions, and investment solutions to grow their wealth. Florey is fluent in English, Cantonese, and Mandarin. So over to you, Florey.
Thank you, Eliane. Good morning, good evening, everyone. 大家好，大家好. It's a privilege to joining HKCBA on this webinar. Let me share my screen. Everyone can able to see it, I think.
Yes.
Let me start the first slide. In HSBC Canada, we are one of the world's largest banking and financial service group. We are the 7th largest bank in Canada, and we have 40 years serving Canadians since 1981. We have 700,000 clients. Our different channel to serve by mobile banking, branches, 140 branches in Canada, and we have 3 main propositions in serving our customer in Premier, including J, our VVIP proposition, advanced and retail customer. And also with 3,700 HSBC and Exchange Network ABM machine, we are able to serve our customer efficiently and proactively. And how we can take care of your mortgage financing. First of all, for those of you not living in Canada right now, I encourage you to bank with your local HSBC bank in your local area, especially in Hong Kong and other regions. Contact your local HSBC relationship manager. They will be able to refer you to our international banking center for HSBC Bank Canada account opening. If you know, right here, you can take a picture of it. Eliane's branch and my branch in Market Village, serving 2 major areas in Toronto GTA area. And then the International Banking Center, we prepare all the forms. Once signed, your local relationship manager will ensure the smooth form signing, and the account will take about a month to open. Let me continue the next slide. So, regarding our HSBC mortgage programs, we are catered to international-minded and high-net-worth clients all around the world. We have traditional mortgage for local Canadian and different types of mortgage I will go over in the next few slides. Let's talk about for traditional mortgage for local Canadian first. As Winson mentioned, Canadian banking industry, we are pretty conservative on approving mortgage to ensure our sustainable and consistent growth on a real estate, and also the default rate reduce, maintain a very low level. So we will take a look on customer credit score. In Canada, credit score can range from 300 to 900 as a credit score. A good credit score is around 650 or 680, and that is meeting our HSBC lending requirement. And credit score, how we can increase our credit score in Canada is ensure you pay your bills on time, pay your mortgage, pay your car loan, pay your credit card, pay your line of credit on time, and on or before the due date. Next slide. And the second criteria for mortgage financing is down payment. Sufficient down payment. We have two types of mortgages. We have 20% or up down payment requirement for our conventional mortgage. So there's no additional premium will be charged. However, for higher loan amount, with minimum 5% down payment, we have premium. We can ask the customer to purchase a mortgage default insurance. The premium will be ranged from 2.4% to 4% based on the mortgage balance. And those customers with strong income, with less down payment, still afford and still can purchase their dream home. And let me talk about a little bit more detail regarding the third most important criteria to approve your mortgage is debt servicing. How we calculate that? We based on two ratios. One of them is gross debt servicing ratio, including your mortgage payment, property tax, heating, and or condo fee, and use it to divide by the applicant's or the borrower's gross income. And also one of the total debt servicing ratio is combining all the above, the gross debt service ratio. And also on top of it is other car loans or credit card or unsecured line credit payment, and use it to divide it by your gross income. Let's take a look for some very interesting new to Canada for our overseas customer to new to Canada program. So for HSBC, we have a very international mind and customer moving into Canada, and we will take a look on their existing or their employment income to better understand their potential to have a higher paying job in the future to serve the mortgage payment. Under this new to Canada mortgage program, the employed or self-employed income requirement is 25,000 only. Including the service ratio, that ratio will be waived. Total borrowing amount is up to $1 million. The minimum down payment required will be 35%, and customer have to show us other than down payment 24 months of mortgage payment in reserve, so we will see the capability to customer to service that mortgage. Is applicable to mortgage only, and we may ask the customer to show us your overseas credit history. Another interesting program we just launched a couple last year is our high net worth program, catered to high net worth clients. We've confirmed 3 million net worth in Canada. Our customer has to be premier qualified, and the applicant has to be Canadian citizen or permanent resident. And how we can qualify the customer for a good mortgage is we have the income confirmation is kind of waived. We just need the customer to provide us a most recent Canada tax return with the notice of assessment. The amount is equal to, is based on a very good scale, is 1-to-1, based on customer non-registered liquid assets in Canada, and HSBC non-stocks account assets can value at 100%. If you're holding HSBC stocks account and or some HSBC non-HSBC assets, those assets can value at 50%. The total lending amount is 1-to-1. So, for example, if you're buying a home for $1 million, if you're getting a mortgage for based on the minimum down payment requirement, the mortgage maximum amount will be $650,000. Other than the down payment, you will need to show us and in HSBC with that $650,000, or either in investment or savings or GICs or term deposit. The minimum mortgage amount will be $200,000, a minimum $200,000 for those of us that's really small condominium maybe. For maximum is $1 million. The maximum repayment payment term is 25 years. It is mortgage only, and the interest rate premium may apply. Let me go over another interesting program we have is wealth-based mortgage program. For those customers with less income to service their mortgage needs, we will use a very interesting, sorry, my email is popping up stuff. We will use the assets to qualify the customer on top of their income. For example, if a customer have sizable savings, we will use that money to add on, let's say develop that by 25 years, add on to the income the customer is holding, and then use that to calculate the total debt service ratio, range from 50% to 60%. In addition, the bank will ask the customer to pledge a 12 months or 1 year or 2 years of mortgage payment as a security. Under this program, the minimum down payment is the same thing as 35%. It's not available for holding company or home equity line of credit. An interest rate premium will apply. And the last interesting program we have is our overseas income program for those of you located in Hong Kong or in China or other overseas countries. It's very ideal for overseas income earner. Restriction may apply for US income earner and China resident and China income earners. It's applicable for new purchase, existing Canadian real estate refinance, either in owner-occupied homes or in rental property or revenue properties. We will ask for overseas credit history, income confirmation from the earning countries or region in the form of pay slips, tax return, tax filing, and salary pay deposit into the bank account. The minimum down payment required will be range from 20% to 35%, depends on the net worth and the income level of the customer. Additional down payment will be required for a non-resident customer. So no customer is not a Canadian citizen, no PR card, and they're not no relations to Canadian residency yet. Those debt service ratio will be standard to HSBC requirement, and then we will take a discount on the overseas income. For example, if a customer earning 200,000 Canadian income, we will discount that income to 170,000 Canadian for debt service ratio. And just the last few slides I want to share with everyone is our excellent HSBC mortgage rate. As Winson mentioned, Canadian economy right now, we have very good Bank of Canada still continue to support our economic growth. That is music to our many investment or homeowners ears. That's why we have very attractive and very great mortgage rate. 5-year variable rate right now for the best customer we have is as 1.24%. 5-year fixed mortgage term is 2.14%. And the last two is for the high ratio mortgage customer have less than 20% down payment. If you have a friend or family who's moving to Canada and you have existing HSBC bank account, you can enjoy our Share the Experience program right here as stated. And last, I want to thank you, HKCBA, HSBC, and please welcome to drop down our email address, Eliane, and my email address if you have questions on mortgages. Back to you, Eliane. Thank you very much.
Thank you, Florey. What you bring to us today are the financial and regulatory matters related to invest domestically and also internationally. And audience, if you do have any questions, please put in the Q&A box so that we can answer. And in the meantime, I do receive some questions from, I think it's for Winson. The first question is, people are working from home now and are giving up their downtown city center home and moving to suburbs office. And so the office, like it is right now, briefly is getting empty. Is that should we divest our available city center somewhere else?
Well, I think it's a great question. I think the short answer to the question is, I think the keyword is diversification. And I would not count out the city center yet. Do I have the crystal ball? I don't, but I can take you back to the memory lane. I do recall way back at 9/11, we also a lot of people say, okay, no one is going to fly in an aeroplane anymore. There is no one going to New York City. Fast forward to immediate before the COVID too, and I think that speak otherwise. I think what you experience right now is short term, and as I mentioned in the slide to you, there is quietly there is already some major lease started to be able to negotiate. I think what COVID did to us is challenging us as a developer, a business owner, to kind of transform the business a little bit. Retail, for example, headed by Apple. Way back, not just right now, immediate before the COVID, you already see the retail transform, like Apple transform the retail into experience driven. So what I see, there is to be no downtown anymore. There will be no work at the office anymore. I think we should take a look at the long run. And as I mentioned, the key is diversification. So if you have not invest anything other than the city of Toronto, it may be a time for you to diversify. Likewise, if you invest most of your real estate holding, away from the city too, it may be a good opportunity for you to pick up some good deals in downtown core as well too. So I think, hope I answered that question.
Thank you, Winson. And there's another question. I think I would like to pass to Florey. I'm interested in purchasing a home for my children's overseas post-secondary studies in Canada. Then how should I proceed with HSBC?
Thank you, Eliane. First of all, open an HSBC Canada account first. That's a very important step. Either we contact me or contact Eliane, contact your local HSBC bank. We can help you on that. And how customer can purchase a home in their customer if you have a children living in Toronto for study. We have situations very frequent to ask us, my son is living right here in Toronto, however, I'm in Hong Kong. Before the COVID time, they can of course fly over here to have that mortgage application complete. In HSBC, we utilize our international platform to help the customer to kind of remotely to help them on the mortgage journey. The property ownership can be under the children's name because some of the study student, they have a social insurance number. So for tax purposes, it's easier for them to purchase that home. And with the parents as a co-signer or covenanter on the mortgage application. That's so we can utilize the parents' net worth and income generated in overseas to support the mortgage payment. We strongly encourage customers to obtain the mortgage pre-approval first, and then if you request financing prior to your property purchase, way in advance. Thank you, Eliane.
Thank you, Florey. And there's another question coming as, will the high-end detached houses have less demand in Toronto? I would like to pass these questions to Winson.
I think interestingly on reverse, and I think there will be growth in our luxury market because Toronto is not renowned in the world-class city. Yes, we do have a quite of the value per se too. And I think key to Toronto's success in the future is we are a global city. As I mentioned before, over 50% of us are not originally from Canada. And then it is an amazing global city with the tech industry coming this way, and then Hollywood North and some other immigration and education opportunity. And I think in the luxury space, and I don't think we are at the world stage yet, and I think that would definitely have growth. If you actually compare our quote-unquote luxury home across various cities in North America, you actually find us to be relatively inexpensive, and it's actually good value in terms of a luxury home as well.
Thank you, Winson, for your valuable feedback. And another question go to Florey. I have a work permit right now and is in the process of applying for my permanent residency in Canada. What kind of document do I need to qualify the mortgage program offered by HSBC?
Thank you, Elaine. For those customers have working permit, so they previously usually is a university student. They graduated in university in have good study in Canada, and then they get into the work permit program. Usually a 3-year program. So and they start working. So they have income. They have income to qualify for that mortgage application. In HSBC, even though the residence status is still not a permanent residence of Canada, we will take a look on each case by case basis, based on the customer, their net worth. Do they have any cosigner or covenanter on the mortgage, and the size of the and on the mortgage. We see a few approval can be obtained. Just want to point out one of the kind of a criteria is we will approve work permit holder if they have applied with the immigration and refugee citizens of Canada with a file number. So they apply for the immigrant status. Once that is application is in the file, we have a file number, so we can support the customer is going to purchase that property in the long run, living and working and contribute to the Canadian economy. Those are the easier approval we can obtain. Thank you, Ling.
Thank you, Florey. And there's another question coming in that I think it's for Winson first. Aside from Toronto, which other cities should one diversify to?
My answer will be biased, and obviously we focus on Toronto. For Tridel, we actually focus on the GTA. But answer your question, let me give you my personal opinion. Is for real estate, it's a long-term investment. Don't buy for somebody else, buy for yourself. So if you have any family member that may have work-related or immigration-related happen in the future, then take a look at the city. I think Canadian city, in compared to a lot of North American city, it still have a various value. So I would focus on your personal needs first. Obviously, as I said, like we think Toronto still have a very good potential. We still deal with the supply issue. There's a lot of immigrants coming here, really focus on the GTA area. So I would focus on the Greater Toronto area first before we look into other city. And save and except if you have some potential for your family needs, then I may start to take a look at other cities.
Yeah, and also I would like to see Florey, what is your view? Like can you see the applicants coming in? They are like in GTA or other area of the cities.
Thank you, Elaine. Just want to tell you, advise all the audience. In HSBC, we have 140 branches in Canada. We're serving different provinces in Canada. For the last 5 years at least, the Ontario province, all the branches in Ontario, the number of mortgages is much higher compared to other provinces. That tells you the strength of the Ontario real estate, especially in GTA area, the strength of that uptake in the future. And also compared to other provinces or cities, just want to chip in a little bit on that front. We are more diverse on our job situation. So applicants have different kind of jobs in opportunities in Toronto rather than compared to Vancouver or Calgary or Edmonton or Montreal. We are more of a global village city in Toronto with as Winson mentioned, education in the GTA area that attract more and more immigrants into Toronto and GTA area. That supports our real estate uplift going forward. Thank you, Elaine.
Yes, I just want to echo Florey's, in my branch, I do receive a lot of applications, and what they are looking for is also in the GTA area where they can find a job more easily, I can say, and especially from the immigrants back from Hong Kong, and they found it easily to get a job and to be settled here. So that's why what Vincent said. GTA is still a good area to invest. Another questions to Winson. There's a pre-construction market is selling at 1,500 per square feet in downtown area. I think that's more expensive sometime now, but resale market is 1,000 to 1,100. Do you predict prices in 4 years to be 1,500?
I wish I can give you this prediction. I
Yeah.
don't, but I can answer it differently. I think when you see the price of the future product is priced more than the current one too, that shows you just confident of the purchaser towards the future compared to now. And especially in like the city, like us as a developer, our price is cost approach. And I show you that slide before our typical cost. The developer profit is hovering around 15%, and then this is cost us that much to build, and therefore we be able to sell at the $1,500 price. And one of the key point is thank you for our finance industry, such as HSBC. The lending policy is very, very conservative. Like I cannot randomly sell, like say if it is a cost as $1,300 a foot, and I randomly market at 2,000, and then at the end of the day I won't be able to sell 75% or 80%, then HSBC won't give me financing. Or the other way around, and I wanted to do a special for HKCBA, and I wanted to market down 20%, and at the end of the day Eliane and Florey would ask, okay, after you sell out the project, you still lose money, why would I funded you the project? So, and I think this type of the safety net and protect us from a certain price that more logical and reasonably. And way back when I first come to Canada, and I remember the first condominium I was overseeing for the sales and marketing, it's actually at Finch and Bayview. Back then was 250 to $300 a foot. Even fast forward before too, back then the Young and French is hovering under $200 a foot. But back then, who would know? Our average price is over 1,000, right? So, and then the other point too, and I think we have to pay attention to, it's Toronto. It's not a major global city yet, although we want it to be. But to be very honest, we are not New York, we are not San Francisco yet. But I think we do have the potential to be there. So if you compare us in terms of the price per square footage across all the North city across North America, $1,500 in U.S. terms, it's maybe $1,100 to $1,200 US only. So if you take that money and try to shop around the major US city, I don't think you'd be able to find too many options. So, and I think, as I mentioned in the presentation today, our market is actually quite resilient. Do I have the prediction? I don't know, but I think we're quite positive about the market.
Thank you, Vincent. And there's another question coming for you. The rental market prices have dropped 10% to 20% in the last year. With rent control of 2% per year, it will take a while to get back to the old rental rates. Condo prices have appreciated continuously, so there is negative cash flow for investors. So what is your opinion on that?
Well, I think, in terms of the price drop for the rental too, I do think it's temporarily. And as a matter of fact, I think even the drop of 10% and 15% to me, it's still considered to be quite resilient. And immediately at the pandemic, I was anticipate a rent drop even further because, mind you, right now, our country is still under lockdown. The immigrants cannot come in, foreign students cannot, rent. And then, some of the audience was already commenting about the work from home scenario. So I would anticipate that the rent will be even lower. But and also don't forget during this time too, a lot of media didn't report. We also add in 7,000 new construction condominium there too. So make the market is really in a negative situation, but still only drop around 10%. I think it's actually quite resilient. Will this trend, I think the key answer to the question is, do we think the trend is going to continue? But to me, I don't think the trend is going to be continue. In terms of negative cash flow, if once again, compare us with any major North American city, or maybe even some Asian city too. If you become a world-class city, you may not be able to get, you know, the cash flow that you were looking for. And since, as I mentioned before, we have cost approach, I don't actually see our cost of construction going too much lower, and therefore our price would not be lower as well too. And but I think the good news is we still have some positive outlook for our immigrants coming in, foreign student coming in, and then we also collectively building a global city. So on that note, and I think the rental market moving forward, it's not as negative as a lot of media was reported.
Oh, thank you, Winson. Right now, there's another questions coming in, and you know, there's a lot of people right now, they work at home, and the preference for purchasing property right now is a little bit different than before. So the question is, people used to buy 1+1 condo as a rental property. That was the most popular size. Would the largest size condo become the new trend, such as 2 or 3 rooms? And what is the most common size unit right now in the building Tridels now?
Yeah, I think we would focus on a little bit more larger home, like in our opinion. 1 and 1% is still a good option, don't get me wrong, but I think, you know, you think about the aging population coming in, and also the other thing, we're also dealing with the supply and affordability. Not many people be able to deal with, you know, the price of the detached home now. So the kind of the option will be a condo. It would be other form of housing that would create other opportunity for perhaps family to grow the family in a condo setting. And that's once again following up with the example from a lot of major city around the world. I think if you compare the supply and demand as well too, we have not built as many a larger home or more number of bedroom compared to way back before. So I think there will be still a catch up to that too. So we would think that there will be more opportunity for the larger home as well too.
Thank you, Winson. Just like want to ask Florey, like do you receive the mortgage application? There's a little bit change from like before, like just a room, or maybe is 1+1 or more than for the customer looking for the condominium.
For condominium financing, thank you, Eliane. We actually see a lot more smaller size application currently, because customer purchased that property maybe a few years ago, and financing based on the affordability of the customer applicant is easier to, of course, qualify. On that front, we don't see a lot of right now. We don't see a lot of negative impact of the rent for those investors, because the market rent, we do the appraisal on some of the rental property. The market rent stays almost the same back to 2019 level. And even some of them is prime location, really prime location, especially those built by Tridel. Actually, the rent is higher. This is what we're seeing. And I just want to touch on the rental property will it affect the investor, especially you're holding a rental property. Actually, in many Canadian banks, we used to be little bit more conservative on rental properties. Maybe loan to value is maybe 70% or even 65%. Now, just want to share with everyone, we're looking at 80% financing in major banks in Canada. So that's the Canadian banking industry have a very optimistic view on the condominium development, because we have very conservative approval approach relative to other countries. So that's the uptick is coming.
Oh, thank you, Florey. Thank you. And I think another question is for Winson too. With the recent budget 2021 announcement, what will be the impact of the proposed tax of overseas real estate investors?
I think once again, I don't have a crystal ball, but I can borrow the experience from Vancouver, and I think Vancouver have a similar test before.
Yes.
The foreign buyer tax, and then the vacancy tax. Well, so they are kind of the example. If you take a look at the current real estate Vancouver market, and it's really have minimum impact. Last year, and I think we kind of do a control experiment already. We anticipated our market is actually driven by foreign buyer, and I think we did a control experiment already because the foreign buyer right now is under the lockdown; they cannot come in. So, and I think I think Eliane and Florey can see that the application coming in and basically from local. So, and I think sometimes that maybe the government or the media underestimated the strength of our market. We did save a lot, and we do a certain part of our community is still quite robust in terms of work from home and then secure a job moving forward. So I think it will be the impact to the real estate market will be minimum, but I do see the positive side of it. Obviously, should there be any unused or underutilized property owned by foreigner, and with this tax that will be open to the supply, that will be a good news story. But I highly doubt that many home that would be kind of released to the market because of this particular tax.
Thank you, Winson, and also thank you, Florey, for your valuable feedback. And I just checked the time; it's almost 11:56, and I would like to pass back to Sohair first. Sohair. Sohair,
yes, I'm unmuted.
Yeah.
Sorry, I have to. I'm sorry about that. We lost Victor for a while because his connection has dropped. But both Victor and I have been working on all the questions coming in. Man, it was fast and furious, just like the movie. There were a lot of questions, and still there are some questions that unfortunately we're not able to answer this morning. So I do apologize for that, but please do take advantage of our panelists and ask them their questions. We had their email up earlier, so if you had a chance to note it down, please do send your questions to either Eliane, Florey, or Winson.
Yeah.
Okay, thank you very much. So, really the time was just shooting by with all those questions. So that we had so much to absorb, those wonderful PPTs. We got a couple of inquiries. Is that, can we get copies? Can we get copies? We won't be able to give them copies of the PPT, but we can certainly give them a copy of the video. And that is what we will share with everybody. This will be a sure thing. Every registrant will get a copy of the video, or at least a link to the video. Now, I'd like to thank all the speakers. They've been really great. Winson Chan from Tridel, Florey Ho from HSBC Bank Canada. By generously, sharing your views and perspective on the market and the investments, both domestically and internationally, you have helped many viewers get a clearer picture of what to expect to do when buying or selling residential property in the GTA. Thank you very much. Also, I have to thank the sponsors, Tridel and HSBC Bank Canada. Our supporters, who most of them are attendees today, participating as attendees, all the HKCBA sections across Canada, all Chinese business associations in the GTA and ACCE, the Federation of Hong Kong Business Associations worldwide, our friends in Hong Kong and Canada, our Hong Kong family supporters, and everyone of you, all our attendees who took the time to join us today. I don't have the slide ready, but I want to take a special thanks to Eliane. She's our charming moderator, did a great job. She's also a board member, an active board member of the HKCBA Toronto. I mentioned that earlier. She's instrumental in putting the panelist team together and also to set the theme for today's webinar. So I do appreciate your contribution for that, and that's why the special thanks to you, Eliane.
Thank you, Sohail.
Okay.
And I hope all the audience, right, are able to benefit from this information provided by our expertise panelists, and have enjoyed the rest of the day, and stay safe.
Thank you very much, Eliane.
Thank you.
So
Thank
now
you.
we haven't quite finished yet. If you do have questions, of course, do send it either directly to the panelists or to me, Zohair at hkcba.com. Zoheir at hkcba.com. We have 2 webinars coming up very, very shortly. I'll keep it very short. May the 27th, it's the infrastructure / public-private partnership projects opportunity in Asia for Canadian companies. This is organized by HKCBA Toronto in conjunction with Hong Kong Economic and Trade Office, as well as the Hong Kong Trade Development Council. It's on May the 27th at 10 a.m. The other one on May the 17th, for job seekers out there, we have a webinar entitled Job Opportunities in Hong Kong, plus the sector-specific work opportunities in Canada. That's May the 17th at 8:30 p.m. The reason why we're having it in the evening is because we're looking at audience coming in from Hong Kong as well. We have even more webinars planned. So, you know, if you want to be on our mailing list, please send your email or your friends or colleagues' email to me, and I will make sure that we get our information about the webinars to you. Once again, thank you very much to our speakers. We appreciate your perspectives as the sector prevails in our current changing times. Also, many thanks to our attendees who took the time to watch and be informed. Enjoy the rest of the day. Thank you.
Thank you.
Okay.